Tesla, a company that needs no introduction, is down over 70% from its high in November 2021. This is really no surprise as the tech sector has taken a real beating since the start of the year. As investors though, the questions we need answers to is if Tesla is now going for a bargain and if we should be considering this for the portfolio. The best way to answer this is by looking at the charts to get an idea of how well the stock has performed in the past, what the stock is doing right now, and what is the future potential. And that is precisely what we are going to deep dive into today. So if this recording helps to up your investor game, don't forget to like, subscribe and hit the bell notification. My name is Zahir Anwari. I'm the co-founder of SublimeTrading.io. We have helped hundreds of private investors over the past 10 plus years profit from trends in the market through our simple to learn methodology. I also write for a number of publications including Benzinga.com, and I'm regularly invited to guest speak on how everyday people can skyrocket their stock's performance, focusing on the next 3 to 5 years. Okay, so a little bit about Tesla. Tesla was actually founded in California by Martin Eberhard and Mark Tarpenning in 2003. I hope I've said those names correctly. Their goal was to be a car manufacturer that is also a technology company, with its core technologies as the battery, the computer software, and the proprietary motor. It was in 2004 when every fanboy's favorite, Elon Musk, got involved when he put $6.5 million of his own money from his $100 million payout from PayPal into Tesla and became the largest shareholder. However, it was actually a lawsuit settlement agreed in 2009 that allowed Musk to call himself a co-founder. So money can get you into very interesting places and acquire very interesting titles. Tesla's mission is to accelerate the advent of sustainable transport by bringing compelling mass market electric cars to market as soon as possible. And with this came the success of the Model Series cars, that's Model S, Model 3, Model X and Model Y, which spells out sexy if you put it together. They used 3 instead of E as Ford actually threatened a lawsuit after having a similar naming scheme. Now, future products include trucks and improved roadsters, so really exciting times ahead for Tesla. Tesla is also into clean energy with the creation of solar panels and solar roofs as part of the Tesla Energy subsidiary. So they are very much staying true to their mission. Tesla currently employs around 110,000 people and had a revenue of 54 billion in 2021. So absolutely nuts. So based on these facts and numbers, let's switch over to the charts and see how Tesla's stock has performed and if the future is as exciting for investors as Elon Musk's Twitter feed is for his fanboys. So this is a typical 3-screen setup of mine when I'm doing my analysis. I have the monthly in the top left, the weekly in the top right, and the daily time frame down here across the bottom. This is the same time frame, the same 3-screen time frame setup that I have used in my previous recordings, and also it's the same setup that I use across all my analysis. So not just stocks, but also commodities, currencies, and even cryptocurrencies. We like to look at the higher time frames here at Sublime Trading, and this is what we train our community members on, because ultimately it gives us a very clear picture of how the stock has performed in the past. It gives us a clear picture of what the stock is doing now, and it gives us a clear picture of what the stock could do going forward. You don't really get that on intraday time frames. The lower down you go, let's say 5-minute time frames, 1 hour time frames, this is where you end up getting caught up in a lot of the noise. And although that's sort of sold as the sexy way to quick riches, it's where a lot of money is lost. The only people that make a lot of money on the lower time frames are brokers, of course, because they collect their spreads and their commission. The smarter approach is to move onto the higher time frames, look at the bigger picture, and that way you do less work for far more profit and you give away far less in fees and commission. So I like to start on the monthly time frame, move to the weekly and then the daily. Okay, so let's start with the monthly time frame. I'm just going to go back in time just so that we get an idea of the history of this particular stock. So we can see that the IPO price was back in 2010. It was around the sort of $5 mark. Price remained inside a tight range. It never sort of broke above $8 from its IPO price to April 2013. So from 2010 to 2013, price remained inside this tight range, and then eventually we had this first breakout where price surged from this point here to this high point here, which is in September 2014. So that is a move of 618%. So that was from November 2012. Sorry, that was from April 2013 to September 2014. That was a pretty significant run, again in a relatively short period of time. Price then went through an area of consolidation. We had a decline back to around the $28 mark, created a support level, moved back up, but remained inside consolidation. It was then in April 2017 where price had another breakout, but this was short-lived. It came to the $80 mark, so it broke out from just short of $60, moved to just short of $80 before creating another area of consolidation. And then it was the breakout in December 2019, which was this breakout here, where price then went on this initial surge towards January 2021. So that's the high at around $900. That is a move of around 1,015%. So again, a significant run. Whenever the stock does decide to move, it moves pretty quickly. So that run there was pretty swift. Went through an area of consolidation, another swift move up to that January 21 high. Price then went through a correction, found support at around $540, went on another run, printed its high at $1,250 roughly. That was a high back in November 2021 and has corrected by around 50% since the high. So what do we know looking at this? What we do know looking at this is that the stock can move and it can trend. When it trends, it moves pretty quickly, but it is also susceptible to these pretty significant swings. So if we have a look at some of these swings, this swing here from this point down here to this point here is a 55% swing. We had another swing here to the downside. That's another 33% swing. If you look at this swing here to the downside, a 40% swing, and now it's already measured this current swing, which is at its peak was around 50%, currently around 43-44% from its high. So this stock is extremely volatile. It can hand out very good profits during good times, but during these challenging times, as we've been facing in 2022, it could swing against you. And if you don't have a good risk management and exit management process in place, then you can end up giving away far more profit than you intend to, and also potentially end up with losses. So you do have to be really careful when looking at this stock. Now, just as an example, if we look at Microsoft, we can see that Microsoft has a much smoother looking chart, a much smoother performance to it, and that's what you're really looking for when it comes to a good stock, a stock that moves slowly, steadily and consistently over many months and many years. So if you look at this is from July 2016 roughly, when you had the breakout, and then it created the high in November 21, and that is a climb of around 580%. So a very, very nice clean climb to the upside. If we go back to Tesla of course has moved far greater distances, double the distance if you like. I mean, that's triple the distance. That's 1,430% roughly from the breakout in January 2020 to the high of November 2021. So a significant climb, but it hasn't been clean. There have been these swings that you've got to sit through, and that isn't always comfortable for investors. So you've got to look at yourself and you've got to think to yourself, well, what kind of investor am I? Do I like the volatility? Do I like these swings? Do I like getting caught up in price action? Or do I want a nice, simple, steady and extremely profitable life ahead by looking at simple, clean, trending stocks? I tend to be in that category as opposed to getting caught up in stocks like Tesla. It's a stock full of noise, and that's often because there's so many people involved in trading this, or whether that's swing trading, day trading, scalping, whatever the case may be. It just makes life very, very difficult. Now, if you move across to the weekly time frame, price is above the 200 moving average. So overall, the stock has a bullish bias. But the trend filter is red, and it's actually trading between the 50 and the 200 simple moving averages. That's the 50, the orange line. Black line is the 200 simple moving average. In an ideal world, for a stock to have an overall bullish bias and a bullish trend to it, we want to see price trading above the 50 simple moving average and also actually trading above the current all-time high. So this quite, for me personally, and here at Sublime Trading, the way we train our investors is to look for stocks that are printing new highs. Stocks that are correcting, pulling back, creating a base, that's really where you want to be standing aside. And this is a good example. This isn't a stock that we want to get involved in. Now, if you've got a different approach where you're trying to find a bottom and you want to get in at the bottom, you have to look at the analysis yourself and figure out whether this is a bottom or not. There's always a chance that this isn't a bottom. Price could drop to the 200 simple moving average. If it breaks through that, it could weaken even further. There's no guarantees as to what price could do next. We prefer the market to dictate a recovery. Once it dictates a recovery, then we start looking for potential opportunities. For us at Tesla, it isn't a stock we get caught up in because they're better looking stocks. But also, if we were to consider this, ideally we want to see a breakout and for the stock to be creating new highs. On the weekly, price is above the 200 simple moving average, giving it a bullish bias. But on the daily, price is below the 200 simple moving average, giving it a bearish bias. Also note the trend filter is red and grey, confirming that potentially we could see further weakness before seeing further strength. Now, of course, the market could be creating a base here. It could recover. And if it does, if it moves above the 200 simple moving average and our trend filter turns green, that would be far more interesting for us from an investor perspective, a trend following perspective, to potentially look for entry points. So for now, given how the stock is performing, given the current setup, this isn't a stock that makes it into our signal service that we share with our community members, because this isn't a stock that makes it into our own personal portfolios. Now, just another point on the monthly time frame. The green line is the high of last year. This red line here is the low of last year. Ideally, we want to see price trading above the high of last year for it to have a bullish bias, or below the low of last year for it to have a bearish bias. If price is trading inside these levels, then generally that's a sideways market and we're standing aside. And if we look across all three time frames, we have a mixture of bullish and bearish factors. We also have a neutral factor, if you like. On the monthly, price is quite neutral in that it's trading inside the levels of last year. On the weekly, price is above the 200 moving average, giving it a bullish bias. And on the daily, price is below the 200 moving average, giving it a bearish bias. Also note on the weekly, the trend filter is alternating between red and grey, confirming it's more bearish to sideways. Also on the daily, prices the trend filter rather is alternating between red and grey, again confirming that price has a more bearish to sideways bias to it. So across the board, this isn't looking healthy for investors to potentially buy into this, not just as yet. If you want to guess a bottom, this could potentially be a stock. If you want to wait for the market as a whole to dictate a recovery and then get an entry point, that would be the smarter choice. And the way to do that is wait for price to move at the earliest above the 200 simple moving average and that $1,000 round number, I should highlight, because price can move above the 200 simple moving average, come to that $1,000 round number, and then be forced back down again. Wait for a recovery, apply some patience, and then consider an entry. Tesla, for now, not a good looking stock, certainly not from the analysis of what the chart is telling us. So guys, I hope you find that useful. Don't forget to like, subscribe, hit the bell notification. Where do you go from here? Go down into the description below, click on the link. The link will open up into the scorecard. Are you ready to skyrocket your stock performance? Take the scorecard, guys, by clicking on this button. It will take you less than 2 minutes to complete. At the end of the scorecard, you'll get an excellent report breaking down your performance, and also 30 days free access to the Hot Stocks Vault, where we share with you the 10 best performing stocks every single week, saving you the time and money to have to find these stocks yourself. See you in the next recording.